Welcome guys, welcome to another video. Today we're talking about the ADA US dollar pair, and as always let's start on the monthly chart. So price is still working its ass off on the 94-cent mark here at the 23.6 Fibonacci retracement level. For the last 2 consecutive months we couldn't get above it. We got violently rejected, and I think this month, this September, we should see the move that breaks this mark here, just because of how the lower time frame structure looks like. We are about to enter a wave 3, which then should easily break this resistance here. What is going to be the next area of resistance once we overcome this level? Right, it should be this box here. It should definitely be there should definitely be a rejection at or a reaction at $1.36. Right, it is the 38.2 retracement level. It is the local high here, the current cycle high, and yeah, lots of people here. There are people stuck, of course, right? People that bought the top area here, that are finally seeing price coming back. They will sell here because they maybe don't expect price to get higher. People that accumulated these zones here, they could think that the rally actually ends here, and there is a potential for that. There is definitely potential for that. So expect some selling pressure here in this box. Not so much between this level, not so much between 95 cents and $1.10, but everything above it until $1.35. So to actually get really bullish, right? To really create some FOMO, some broader FOMO for ADA, we have to overcome this level here, right? So what I expect is September should go up, and we should consolidate then here in this box before we can take this level here and attack the 50% and the golden pocket here, or the golden ratio. The golden ratio, which is in the $2 area. Let's dive into the Elliott wave structure, which I am tracking here, and I will follow this path until it gets invalidated. So far we are holding structure. We should be here in this green box, right? We had this wave 2 low. Since then we are breaking out of this wedge here, and this should be our wave 3 in brackets. If we look at this wave 3 in brackets, we can dissect this into further 5 waves. In this sequence we should have already made this first wave, this a second wave, and now we are in again another internal sequence of 5 waves for this wave 3 here, right? So we are in this wave 3, as I titled in my previous video. The wave 3 has started. It has actually started in June, July, and now we are waiting for the start of this internal wave 3, which should be a very aggressive and impulsive move. Now maybe on the daily chart you can see it a little bit better, right? We have this 1-2, a 1-2, and you can see it a little bit better here on the daily chart, right? You have your wave 2 low, and now you go into your 1-2, 1-2. Again, this is not confirmed. This right now is a potential. There is definitely a world where this is just an ABC and we keep correcting, right? If Bitcoin fails to proceed, if Bitcoin made its top, we're not going to see this. I mean, it should be clear at this point that if Bitcoin fails, everything else will also fail, because this is just how crypto works. So we have a little bit of a contradiction here in terms of momentum. If we look at ADA on the 3-day chart, we can see that the MACD is showing we have a looming bearish cross, which would indicate more a downside in the short term. But on other time frames, like the daily chart, we have a decreasing bearish momentum, right? It looks like it wants to cross bullish very soon. So, and on the 2-weekly chart, we have a bullish cross. So there is a little bit of contradiction here, and if we are in such a situation, we have to look at the bigger picture. right? What is the overall trend? And the overall trend is very clearly bullish. I mean, we are having higher highs, we have higher lows, we have the momentum on the higher time frames, like on the weekly chart and the 2-weekly chart. It is in bullish territory, right? Both lines are above zero. They're crossing bullish here. So the higher time frame signals should override this signal. So I wouldn't put too much credit into this. It could easily be a fake signal. I mean, it hasn't even crossed yet. It could be just a looming bearish cross, or if it crosses bearish, it could reverse very soon, because in the very short term, look at the daily chart here, it looks like it wants to break out. So another point is structure, and this move here to the downside, it lacks any impulsivity, right? It is a corrective move, and at some point this move will end. It actually even bounced out of the golden pocket, which is very bullish. Now we are breaking out of this wedge here. Also, Bitcoin is breaking out of this wedge on the daily chart. So it does look like we are leaving this corrective structure here. So also in terms of the structure, it rather looks for upside continuation rather than more downside. So I would say that this is noise, given the fact we have a rather bullish higher time frame picture. So talking about structure, let's also have a look at the lower time frames. We are here on the 4-hour chart, and price just moved within this descending channel over the past 2 weeks, and currently trying to break out, hitting this resistance line here. And let's dissect it a little bit. Is this actually the bottom here, or do we get another downside squiggle? What's realistic? Okay, let's start. So in the previous video, I already dissected this first part, right, in A, B, C, and to W. Then you can debate if this is a flat or if this is an ABC for X. Not that important at this point. We have a first wave down, another wave up, a correction within the correction. It should be the X level, the X wave. More important is actually the level, and this is where you expect an X for a sharp complex correction to finish between the golden ratio and the 786. So I theorized in the previous video that this could be a trend continuation, and if it's not, we would rather get rejected sooner than later, which we got, right? We actually, once we hit this level, we got rejected. So and the correction continued, and the final part here, the Y, it is also in 3 waves, right? So it is most likely a complex correction. It definitely a corrective move. It has no impulsivity so far whatsoever. So there's not, just by the structure here on the 4-hour time frame, it just doesn't give us any hint for a impulsive move to the downside, right? Which we need to actually invalidate the 1-2 scenario. Let's proceed with the Fibonacci levels, extension levels, and retracement levels, which are even more important than the exact type of correction that we are witnessing. It is a corrective structure. This is the most important part. It is not impulsive. And what levels did we hit? So we have 3 waves. You have W, X, Y, and this Y wave, it terminated so far between the 786 and the 100%, which is rather common. We should be open-minded for the possibility that we see another downside squiggle here to actually get to the 100% level, to maybe terminate between the golden pocket and the 786, right? So that is a potential. If we fail here to break out, we will see another downside squiggle, and let's see how this is working out. So, but if this actually was the bottom here, which wouldn't wonder me, because that are common levels here to end such a correction, right? A wave 2 and a W. So to conclude this video, we will also look at the Fibonacci time levels. I haven't used this tool so far on this channel, and so I will introduce it to you. It is called the trend-based fib time. You can find it here in the on the left side in the toolbox. And it is measuring time relations, right? We can not only measure Fibonacci extensions and Fibonacci retracement levels, we can also measure the relation, the Fibonacci time relation between waves, right? So like here we have a 1, 2, right? We first click start of wave 1, a second click end of wave 1, and then another click to fixate this the values that are displayed here. And you can see this ABC, the simple correction terminated between a 0.382 and a 0.618. This is what you expect for a simple correction within a wave 2, and it shouldn't really get past the 0.618. At least that's the standard for traditional markets like stocks and all that. But in crypto, your wave 2 is sometimes complex, and if it gets past the 0.618, it will likely hit between 1 and the 1.618. And if it's really an extremely elongated correction, it even can get to 2 and further. But this is very, very rare. So most of the time it will hit, if it's complex, between 1 and 1.618, rather 1.382 and 1.618, right? So, and here it is, a wave 2, it terminated at 0.382, which is again rather common if we are talking about simple corrections, which an ABC is. So now let's measure this 1, 2 here. What do we get here? Yeah, this wick here was created slightly after the 1.618 was hit. So it's just from in terms of Fibonacci time relation, it is another point of confluence that this correction is either over, that we have this bottom, or it is in its final stages. Maybe we go down again and hit the 2. It's possible, right? So, but the 1.618 is a very common level for a complex correction to end. Now, let's change the time frame, 12 hours, and let's look at another relation here, right? We have another wave 1 and this huge wave 2, which is also obviously complex. So what level do we get here? The start of wave 1, end of wave 1. Now it shows us the levels, and you can see this low here was found slightly after the 1.618 was hit, right? So it can be a reliable tool. You just have to use it the right way, and it adds another confluence to our analysis. So that's it for today. If you haven't subscribed already, do it now. I will add a lot of content over the next weeks. I will also start to analyze other titles, and you will get lots of high quality content here. So leave me a like and comment. Maybe you have a suggestion. Maybe you want to add your own analysis or your opinion on this analysis. I'm really open to everything, to critique and all that. Maybe you're an analyst yourself. I would like to hear from you. So yeah, that's it. See you in the next one.